Good day, everyone, and welcome to Lecture 2 of our e-banking course. I hope you are all doing well. In our previous lecture, we introduced the concept of e-banking and discussed how banking has evolved from traditional branch banking to digital financial services. Today, we will move one step further by studying the technologies and infrastructure that make electronic banking possible. Whenever you use an ATM, transfer money through a mobile banking application, pay your bills online, or shop using bank card, there is a complex technological system working behind the scenes. Our objective today is to understand these systems. Specifically, we will discuss banking transformation systems, core banking systems, internet banking platforms, modern banking technologies such as mobile banking, cloud computing, artificial intelligence, open banking, and blockchain. By the end of this lecture, you should be able to explain how these technologies work together to provide secure, fast, and reliable banking services. So let us begin with banking information systems with your instructor, Dr. Magda Mustafa Sadiq from Faculty of Economics, Financial and Banking Studies, Sudan International University. The first concept we need to understand is a banking information system, often abbreviated as BIS. A banking information system is an integrated computer-based system that collects, stores, processes, and manages all banking information. Think of it as the brain of a modern bank. Just as the human brain receives information, processes it, stores memories, and sends instructions to different parts of the body. A banking information system performs similar functions for a bank. Every day, banks receive thousands or even millions of transactions. Customers deposit money, others withdraw cash, some transfer money internationally. Many pay electricity bills or purchase goods online. All these activities are processed automatically through the banking information system. Without such a system, banks would have to record every transaction manually. This would be slow, expensive, and highly prone to errors. The banking information system also allows managers to monitor operations, prepare reports, detect fraud, and make better business decisions. In simple words, the banking information system is a technological foundation upon which all electronic banking services are built. Let us come to the components of a banking information system. A banking information system consists of several important components. Let us examine them one by one. The first component is hardware. Hardware refers to all the physical equipment used by banks. Examples include servers, desktop computers, ATMs, point-of-sale terminals, network devices, and mobile devices. Servers store banking applications and customer data. ATMs allow customers to withdraw cash at any time. Point-of-sale terminals enable customers to pay electronically in shops and supermarkets. Without hardware, banking software cannot operate. The second component is software. Software consists of computer programs that perform banking operations. Examples include the core banking system, internet banking software, mobile banking applications, customer relationship management systems, and accounting software. Software tells the hardware what to do. When a customer transfers money through a banking application, software processes that request automatically. The third component is the database. A database is an organized collection of information. Banks store customer names, addresses, account balances, loan information, transaction histories, and financial report inside databases. Whenever you check your account balance, the information comes directly from the bank's database. The fourth component is networks. A network is a communication infrastructure that connects all parts of the banking system. Think of a network as a system of highways connecting different cities. Just as highways allow people and goods to travel from one place to another, computer networks allow banking information to travel securely between different locations. For example, when a customer withdraws cash from an ATM, the ATM immediately communicates with the bank's central server through the network. Similarly, when a customer uses mobile banking, the smartphone communicates with the bank through the internet. Networks connect bank branches, ATMs, point-of-sale terminals, mobile banking applications, internet banking platforms, payment gateways, and even other financial institutions. Without reliable communication networks, electronic banking services would simply not be possible. The fifth component is people. Although modern banking relies heavily on technology, people remain one of the most important components. Different groups of people interact with the banking information system every day. Customers use ATMs, mobile banking applications, and internet banking websites. Bank employees process transactions, open customer accounts, and provide customer support. System administrators maintain the servers and databases. IT specialists install software, protect the network from cyber attacks, and solve technical problems. Managers use the information generated by the system to make strategic decisions. In other words, technology supports people, but people operate and manage the technology. The sixth and final component is procedures. Procedures are the rules and guidelines that determine how banking operations should be performed. These procedures ensure that every employee follows the same standards when processing transactions. Examples include customer identification procedures transaction approval procedures, password management policies, backup procedures, disaster recovery plans, and fraud prevention measures. Procedures are especially important because they help banks maintain consistency, improve security, reduce operational risk, and comply with government regulations. So when we combine hardware, software, databases, networks, people, and procedures, we have a complete banking information system capable of supporting modern banking services. Now that we understand banking information systems, let us discuss one of their most important components, the core banking system, commonly known as CBS. The core banking system is the central software platform used by banks to perform their everyday banking operations. The word core means the most essential or fundamental activities of a bank. These activities include opening customer accounts, accepting deposits, approving loans, processing withdrawals, transferring funds, calculating interest, and maintaining customer records. Before the introduction of core banking systems, each branch operated almost independently. If a customer opened an account in one branch, they often had to visit that same branch to perform banking transactions. Today, this is no longer necessary because of the core banking system. Customer information is stored in one centralized database. This allows customers to access their accounts from any branch, ATM, mobile banking application, or internet banking platform. Imagine you opened your bank account in Khartoum. Later you travel to Port Sudan or Cairo. Because the core banking system connects all branches together, you can still withdraw money, transfer funds, or check your account balance without returning to the original branch. This is known as anywhere banking, and it is one of the greatest advantages of core banking system. Another important feature is real-time processing. Real-time means transactions are completed immediately. For example, when you transfer money using mobile banking, your account balance is updated instantly. The recipient also receives the funds almost immediately. This speed improves customer satisfaction while reducing operational delays. Today, nearly every commercial bank in the world depends on a core banking system. Without it, modern digital banking would not exist. Let us now examine the major components of a core banking system. The first component is customer database. This database stores all customer information. It includes names, addresses, identification numbers, account details, contact information, and account balances. Whenever a customer visits a branch or logs into internet banking, the system retrieves information from this database. The second component is a transaction processing module. This module processes thousands or even millions of banking transactions every day. These transactions include deposits, withdrawals, transfers, loan repayments, and bill payments. The system automatically checks account balances, verifies customer information, and updates records after each transaction. The third component is the loan management module. This module manages the entire lending process. It records loan applications, evaluates repayment schedules, calculates interest, monitors outstanding balances, and tracks repayments. The first component is the deposit module. This module manages all types of deposits, including savings accounts, current accounts, and fixed deposits. It also calculates interest automatically according to the bank's policies. The fifth component is the payment module. This module processes electronic payments. Examples include online purchases, salary payment, utility bill payments, ATM withdrawals, mobile money transfers, and card payments. The sixth component is a security module. Security is one of the highest priorities in banking. This module protects customer information by using passwords, encryption, authentication systems, and fraud detection mechanism. Its objective is to ensure that only authorized users can access banking information. The final component is a reporting module. Banks generate many reports every day. Managers need operational reports. Government regulators require compliance reports. Auditors need financial reports. The reporting module automatically prepares these reports using information stored in the banking system. As we can see, each module performs a specialized function, but together they create one integrated banking platform capable of supporting all banking operations efficiently. Now that we understand the main components of a core banking system, let us discuss what this system actually does on a daily basis. In other words, we will examine the core functions of a core banking system. These are the essential banking activities performed automatically by the system every day. The first is account management. Every relationship between a customer and a bank begins with an opening an account. The core banking system manages the entire the core banking system manages the entire account life cycle. It creates new savings accounts, current accounts, and fixed deposit accounts. It updates customer information whenever changes occur, such as a new address, phone number, or email. It also allows bank employees and customers to check account balances and account status instantly. Imagine a customer visits the bank to open a savings account. Instead of completing every day manually, the bank employee enters the customer's information into the core banking system. The system immediately creates the account, assigns an account number, stores the customer's details, and makes the account available across all branches and digital banking channels. This process takes only a few minutes before of automation. The second function is deposit management. Deposits are one of the main sources of funds for commercial banks. The core banking system records every deposit made by customers. Whether the customer deposits cash at a branch, uses a check, transfers money electronically, or deposits funds through an ATM. The system records the transaction immediately. Another important responsibility of the deposit management module is calculating interest. For example, if a customer has savings account earning 5% annual interest, the system automatically calculates and credits the interest according to the bank's schedule. This eliminates manual calculations and reduces errors. The third function is loan management. Loans represent one of the major income-generating activities of banks. The core banking system manages every stage of the loan process. It records loan applications. It assists in evaluation the customer eligibility. It calculates repayment schedules and interest amounts. It monitors outstanding balances. It records every repayment made by the customer. If a customer misses an installment, the system automatically updates the account and may generate reminders or alerts for bank staff. This helps bank monitor credit risk and maintain accurate loan records. The fourth function is fund transfer. Today, customers expect money transfers to be completed quickly and securely. The core banking system makes this possible. Customers can transfer money between their own accounts, send money to another customer within the same bank, or transfer funds to another bank. International transfers can also be processed using systems such as SWIFT. Examples include electronic fund transfer, EFT, real-time gross settlement, RTGS, and automated clearinghouse, ACH. These services make banking more convenient while reducing the need to visit a branch. Let us continue with the remaining core functions of the core banking system. The fifth function is payment processing. Modern customers use many different payment methods every day. For example, they pay electricity bills, water bills, school fees, mobile phone bills, online shopping purchases, salaries, and merchant payments. The core banking system processes all these payments electronically. When you pay a utility bill through internet banking, the system immediately verifies your account balance, deducts the payment amount, updates your accounting records, and transfers the money to the service provider. Everything happens automatically within a few seconds. The sixth function is customer information management, also known as the Customer Information File, or CIF. One of the greatest strengths of modern banking is that all customer information is stored in one centralized database. The CIF contains personal information such as customer names, identification numbers, addresses, contact details, account relationships, transaction history, and know your customer, or KYC records. This centralized information allows any authorized branch to serve the customer quickly. For example, if a customer opens an account in one city and later visits another branch hundreds of kilometers away, the employee can immediately access the customer's information through the core banking system. This improves customer service and reduces duplication of records. The final function is reporting and compliance. Banks operate in a highly regulated environment. They must prepare financial reports, regulatory reports, audit reports, and risk management reports regularly. The core banking system automatically generates these reports using information stored in the database. The system also helps banks comply with government regulations and international banking standards. For example, the system supports anti-money laundering, commonly known as AML, and know your customer requirements. It helps identify unusual transactions that may indicate fraud or money laundering. As you can see, the core banking system is much more than a simple database. It is an integrated platform that supports every major banking activity while improving efficiency, accuracy, customer satisfaction, and regulatory compliance. Now let us move to another important topic in today's lecture: Internet banking platforms. Over the past 2 decades, Internet banking has completely transformed the way customers interact with banks. In the past, customers had to visit a branch during working hours to perform almost every banking transaction. Today, customers can access their accounts from home, their workplace, or even while traveling. All they need is a computer or smartphone connected to the internet. An internet banking platform is a secure web-based system that allows customers to access and manage their bank accounts online. These platforms connect directly to the bank's core banking system. This means that every transaction performed online is updated immediately in the customer's account. Internet banking supports both financial and non-financial transactions. Financial transactions include transferring money, paying bills, opening deposits, and repaying loans. Non-financial transactions include checking account balances, viewing account statements, updating contact information, or requesting a checkbook. One of the biggest advantage of internet banking is 24-hour availability. Unlike traditional branches, internet banking operates 7 days a week and 24 a day. Now let us look at the main features that make internet banking platforms so useful for customers. These features are designed to provide banking services that are fast, convenient, secure, and available at any time. The first feature is account management. This is one of the most frequently used services. Customers can log into their online banking account and immediately view their account balances. They can also check recent transactions, monitor deposit and withdrawals, and download monthly account statements. For example, instead of visiting a bank branch to request a printed statement, customers can simply log into their internet banking account and download it within seconds. The second feature is funds transfer. Internet banking allows customers to transfer money quickly and securely. Customers can transfer money between their own accounts, such as from a saving account to a current account. They can also transfer money to another customer within the same bank or to accounts in different banks. International transfers are also available in many banks. This feature has significantly reduced the need to carry cash or visit bank branches. The third feature is bill payments. Today, customers can pay almost every type of bill online. Examples include electricity bills, water bills, and others. Instead of standing in long queues, customers simply select the organization, enter the payment amount, and confirm the transaction. The payment is processed immediately, saving both time and effort. The fourth feature is loan services. Many banks now allow customers to apply for loans through internet banking. Customers can complete loan application form online, upload supporting documents, check the status of their applications, and make loan repayments electronically. Another useful feature is deposit services. Customers can open fixed deposits or investment accounts without visiting the bank. The internet banking platform automatically calculates interest and records the deposit in the customer's account. The next feature is card management. Customers can manage their debit and credit cards directly from the online platform. Some banks can also offer foreign exchange services. Customers can check exchange rates, buy or sell foreign currencies, and perform international transactions directly through internet banking. Another important feature is customer support. Most internet banking platforms include secure messaging systems, live chat services, frequently asked questions, and online service requests. Customers no longer need to wait in long queues or to receive assistance. Finally, perhaps the most important feature is security. Banks invest heavily in protecting customer information. Modern internet banking platforms use encryption to protect data while it is transmitted over the internet. They also use one-time passwords, commonly called ATMS, multi-factor authentication, or MFA, biometric authentication, such as fingerprint or facial recognition, and continuous fraud monitoring. These security measures work together to protect customers from cyber criminals and unauthorized access. When all these features are combined, internet banking provides customers with a banking experience that is fast, efficient, convenient, and secure. Now that we understand the services provided by internet banking, let us examine the major components that make these services possible. The first component is the customer interface. The customer interface is a part of the system that customers actually see and use. It is usually a secure website or web portal that customers access using an internet browser. Some banks also provide a similar interface through mobile applications. When customers log into internet banking, they first see their dashboard. This dashboard displays important financial information such as account balances, recent transactions, payment options, transfer services, and personal notifications. The design of the customer interface is extremely important. A well-designed interface should be simple, user-friendly, and easy to navigate. Customers should be able to complete common banking tasks without confusion. Banks continuously improve their interfaces to enhance customer satisfaction and encourage more customers to use digital banking services. The second component is authentication and security module. Because banking involves sensitive financial information, Security is the highest priority. Before allowing customers to access their accounts, the system must verify their identity. This process is known as authentication. The most common authentication method is the traditional username and password. However, passwords alone are no longer considered sufficient because cyber criminals may attempt to steal them. For this reason, banks use additional layers of security. One of the most common methods is a one-time password or OTP. An OTP is a temporary security code sent to the customer's registered mobile phone or email address. The code is valid for only one transaction or logging session. Even if someone knows your password, they cannot access your account without the OTP. Many banks also use multi-factor authentication, commonly called MFA. Multi-factor authentication requires customer to provide 2 or more forms of identification before access is granted. Another modern security method is biometric authentication. Instead of remembering passwords, customer can use their fingerprints, facial recognition, or even voice recognition to verify their identity. The authentication and security module also monitors customer activities for suspicious behavior. If unusual transactions are detected, the system may temporarily block the transaction or require the system may temporarily block the transaction or request additional verification before processing it. This helps prevent fraud and process customer account. In the previous slide, we discussed the first 2 components of an internet banking platform: the customer interface and authentication and security module. We will continue with the remaining components that work behind the scenes to deliver online banking services. The third component is a transaction process engine. As the name suggests, this component is responsible for processing all banking transactions requested by customers. Whenever a customer transfers money, pays a bill, purchases foreign currency, or repays a loan through internet banking, the transaction is first sent to the transaction processing engine. The engine checks several things before approving the transaction. It verifies that the customer has successfully logged into the system. Next, it checks whether there are sufficient funds in the account. It also confirms that the account is active and that the requested transaction complies with the bank's policies. Once everything has been verified, the system processes the transaction immediately and updates the customer account balances. One of the most important characteristics of the transaction processing engine is real-time processing. The fourth component is integration. You may remember from our earlier discussion that the core banking system is the heart of the bank. The internet banking platform does not store banking information independently. Instead, it communicates continuously with the core banking system. Whenever a customer performs any transaction online, the internet banking platform sends the request directly to the core banking system. This eliminates inconsistencies and ensures that customer records remain synchronized across every banking channel. The fifth component is the payment gateway. A payment gateway is a secure system that allows electronic payments between customers, merchants, and financial institutions. You can think of it as a secure bridge connecting banks with online businesses. For example, when you purchase a product from an online store using your debit or credit card, the payment you can think of it as a secure bridge. For example, when you purchase a product from an online store using your debit or credit card, the payment gateway securely transfer your payment information to the bank for authorization. The bank verifies that sufficient funds are available and confirms the payment. Only then a transaction completed. Without payment gateways, secure online shopping would not be possible. Payment gateways also support utility bill payments, tuition fees, airline tickets, and others. The final component is the database management system, commonly known as the ATMS. The database management system stores all the information needed by the internet banking platform. This includes customer profiles, account balances, transaction histories, audit logs, logging records, and security information. The database must be highly reliable because banks process enormous amounts of information every day. The database management system ensures that all information is stored accurately, securely, and efficiently. It also supports data backup and disaster recovery. Let us come to the others emerging e-banking technologies and infrastructure. So far, we have discussed the technologies currently used by banks. However, banking technology continues to evolve rapidly. New digital technologies are transforming the financial industry and changing how banks deliver services to customers. The first technology is mobile banking applications. Today, smartphones have become an essential part of daily life. Banks have taken advantage of this trend by developing banking applications. These applications allow customers to perform almost every banking activity directly from their smartphones or tablets. The greatest advantage of mobile banking is convenience. Second technology is cloud computing. Traditionally, banks stored all their data on physical servers located inside their own data centers. Today, many banks are moving some of their computing resources to cloud platforms. Cloud computing provides flexible computing power, large storage capacity, and powerful backup systems. Instead of purchasing expensive hardware, banks can access computing resources whenever needed. This reduces infrastructure cost while improving scalability, reliability, and disaster recovery. Another important technology is artificial intelligence, commonly called AI, together with machine learning. Artificial intelligence allows computer systems to perform tasks that normally require human intelligence. Machine learning is a branch of AI that enables computers to learn from data and improve their performance over time. Banks use AI in many ways. Virtual assistants and chatbots answer customer questions 24 hours a day. Fraud detection systems analyze millions of transactions and immediately identify unusual activities. Credit scoring systems evaluate loan applicants more quickly and accurately. AI also allows banks to recommend financial products based on customer behavior and preferences. As a result, customer service becomes faster, smarter, and more personalized. In the previous slide, we discussed three important technologies that are transforming modern banking: mobile banking applications, cloud computing, and artificial intelligence with machine learning. Now let us continue with three more technologies that are playing major role in the future of electronic banking. The first is ABIS, and open banking. ABI stands for application programming interface. Although this may sound like a technical term, the concept is actually quite simple. An ABI is like a secure bridge that allows different software systems to communicate with one another. Think of it as a waiter in a restaurant. When you place an order, you do not go directly to the kitchen. Instead, the waiter takes your order to the kitchen and brings your meal back to your table. Similarly, an ABI carries requests and information between different computer systems. In banking, ABIs allows banks to communicate securely with authorized third-party companies, often called fintech companies. This forms the basis for open banking. Open banking allows customers to give permission for trusted financial service providers to access certain banking information through secure ABIs. It is important to remember that customer permission is always required. The bank does not share customer information without authorization. For example, imagine a customer uses a budgeting application. Instead of entering every transaction manually, the customer can authorize the application to access account information through open banking ABIs. The application automatically retrieves transaction data and helps the customer manage spending, prepare budgets, and monitor savings. Another example is digital payment applications that connects directly to bank accounts using ABIs. The final technology we will discuss today is blockchain technology. Blockchain is one of the most significant technological developments in modern finance. A blockchain is a decentralized digital ledger that records transactions securely across many computers. Unlike traditional databases controlled by one organization, blockchain stores identical copies of transaction records across multiple computers within a network. Whenever a new transaction occurs, it must be verified by the network before it becomes part of the blockchain. Once recorded, the information cannot easily be changed or deleted. This makes blockchain highly secure and resistant to fraud. Because every transaction is permanently recorded, blockchain provides excellent transparency and accountability. Banks are exploring blockchain technology in several important areas. Once application is cross-border payments, traditional international money transfers often involve several intermediate banks and may take several days to complete. Blockchain technology can reduce both processing time and transaction costs. Another important technology is trade finance. Okay, but we are not going to discuss this now. Okay. Thank you, my students. Please solve these review questions that cover the major learning outcomes of today's lecture, and upload your answers directly to your Telegram group. Today we explored the technologies that form the foundation of modern electronic banking. We began by discussing banking information system and their 6 major components. We then examined the core banking system, its components, and its essential functions. Next, we studied internet banking platforms, including their key features and technical components. Finally, we explored emerging technologies that are shaping the future of banking, including mobile banking applications, cloud computing, artificial intelligence, machine learning, ABIS, open banking, and blockchain technology. Thank you very much for your attention, and I hope this lecture has helped you understand the technological infrastructure behind modern banking. Please review the lecture slides, revise the key concepts, and complete the review questions before our next class. I look forward to seeing you in the next lecture. Thank you and have a wonderful day.